We're here today with Stephen Dorrian again, Head of Market Data and Access Services Europe for Cboe's Global Markets. Cboe's data powers INDMoney's US offering, and so we wanted to bring Stephen back in to educate our users on the shift to 24 into 5 US equities trading.
Hi, thanks for having me back.
So, Stephen, can you give us an overview of what Cboe does?
Yeah, certainly. I think I covered Cboe a bit more depth in our last video. But Cboe is the world's go-to derivatives and exchange network. We operate exchanges that offer access to options, futures, equities, including US equities, which is kind of the main topic of today's video, and FX across markets in both North America and Europe. And we're also a leading financial data and index business, harnessing the data from our exchanges. And before we dive deeper, I should say the content of this video is intended for educational and informational purposes only, and should not be considered investment advice or a recommendation regarding any financial product whatsoever.
So, Stephen, we heard a lot about shift to near 24 into 5 trading for US equities. Why does that matter and what is driving the demand from your perspective? Currently, regular trading hours are 9:30 a.m. to 4 p.m. This would extend access around the clock, and there's an industry push to make US equities markets available 24 hours a day, 5 days a week. Why does that matter on a global scale?
Yeah, sure. So, look, markets have become increasingly interconnected, and investors worldwide are more eager than ever to access markets outside of their own country. Currently, I would say international investors are the most likely to be trading during US overnight hours or early morning in their own time zone. And these investors, especially in the Asia Pacific region, want access to US equities during their business hours. Events in Asia or Europe that once influenced prices only after the US market opened can now be acted on in real time. And that immediacy can make a significant difference in risk management and positioning. And you mentioned it as part of your question. Traditionally, U.S. equities have traded on exchanges from 9:30 a.m. to 4 p.m. U.S. Eastern Time. Some exchanges like Cboe also operate a pre and a post trading session. So access to the US markets has really been extended to 16 hours of the day from 4 a.m. to 8 p.m. Eastern when you add in those pre and post sessions. But that's changing. And I think interest in expanded access has grown rapidly. And the SEC, or the Securities and Exchange Commission, really the US regulator, which we touched upon in our last video, has confirmed that US equity exchanges will be permitted to operate nearly 24 hours a day, 5 days a week, once the necessary regulatory requirements are in place. And I say near 24 hours because there has to be a small window for system maintenance. So in reality, I think what we're likely to see is 23 by 5 trading. And this round the clock trading is going to enhance accessibility and enable investors to incorporate US stocks into their portfolios more seamlessly.
So, do any other US markets trade 24 hours a day?
Yes, so Cboe offers nearly 23 by 5 trading in its options and futures markets, and we have done since 2021. Additionally, Cboe's FX markets operate 24 hours a day. For US equities, Cboe currently has its EDGX and BZX equities exchanges available for execution from 4 a.m. to 8 p.m. And we actually start accepting orders for that market from 2:30 a.m. So we're well prepared to offer 24-hour trading in its US equities market as soon as the proper regulatory structures are in place.
So, some venues trade US equities overnight today. Can you explain that?
Sure. So I think there's a key distinction between alternative trading systems or ATSs and exchanges. And with Cboe being an exchange, we're dependent on the regulatory changes that I mentioned. So there are generally these ATSs that operate in the overnight space from 8 p.m. to 4 a.m. when the exchanges are closed. However, there are generally four key differences between an alternative trading system and an exchange. So the first one is exchanges need to offer open access, meaning non-discriminatory access in a multilateral environment, meaning an all-to-all market. Whereas ATSs can be selective with their clients and curate liquidity pools for different customer segments. The second change or key difference, I suppose, is exchanges are required to have public fee schedules, whereas ATS fees can be privately negotiated with different participants paying different fees. Thirdly, exchanges have pre-trade transparency requirements, which means they have to show the best bid and the best offer in the order books, which helps price formation. Whereas ATSs typically are what we call dark venues, only reporting trades and not quotes. And then the bids, offers, and trades that an exchange publishes are then sent to the Securities Information Processor or SIP, and that's used to construct the National Best Bid and Offer or NBBO, which is used as a benchmark for investor protection and price execution, which is why that price formation function of an exchange is so important. And then the final key distinction is that exchanges are regulated as exchanges, whereas ATSs are regulated as broker dealers. And there's a higher burden of regulation on exchanges as self regulatory organizations. And then currently, the overnight trading across these ATS venues is less than 1% of the total daily US equities volume. But we'd expect that total overnight volume to grow when the exchanges go live. So, to put some numbers on that, the average daily volume in the overnight session from 8 p.m. to 4 a.m., it's usually around 15 to 40 million shares. And that's compared to around 20 billion shares a day more broadly in the US market.
Okay. So you mentioned earlier that the move to 23 into 5 trading hinges on regulatory structures. Can you elaborate on that and what needs to happen for US equities trading to be available around the clock?
Yeah. So the U.S. Securities and Exchange Commission, or the SEC, they are working on regulatory changes to make this possible. I mentioned before that the SEC requires that exchanges report trades and quotes to the Security Information Processor, or SIPs, in real time, and therefore exchanges can only operate while the SIPs are operating. So work is being done currently to make the SIPs operational around the clock. However, that is a massive undertaking, although we expect the work to be completed this year. And then once the SIPs are operational 24 hours a day, the SEC has indicated it will approve filings from exchanges for overnight trading. And the second regulatory structure that needs to be in place is really proper clearing procedures. So the Depository Trust Clearing Corporation, or DTCC, that clears for the US equities market, has confirmed its commitment to 24-hour trading to ensure efficient clearing and settlement. So as an exchange, we need both the clearing and the SIPs operationally ready, and then the exchanges will extend their hours to support US equities around the clock.
So how can people outside the US access US equities markets in the meantime?
Yeah, so look, the market is still open during those core hours. Really, what we're talking about here is an extension from 16 to 24 hours. So all of the existing methods of connections are still valid. And investors worldwide can access Cboe's US equities market data in real time through a variety of channels, including via the INDMoney platform. And this provides investors with a greater access to information that can help build understanding of the US market dynamics.
Thank you so much for your time and sharing your knowledge with us. It was a pleasure having this conversation with you, Stephen.
Yeah, likewise. Thanks for having me.